Today, Bitcoin slides to $115,000 to cap the week. Tesla's earnings reveal the automaker's digital asset holdings rose substantially from the year before. And the CEO of 10x Research breaks down what's weighing on the Bitcoin price. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red to end the week, while the S&P 500 rose this morning as it closes out a winning week following solid earnings results and the latest trade developments. As of noon Eastern, Bitcoin slipped to the $115,000 level. Ether dropped nearly 2.5%, and Solana's SOL token fell nearly 6%. For the week, Bitcoin is down 1.5% as of noon, its first back-to-back weekly loss since early June. Ether, however, is up 2%, its fourth up week in a row and longest weekly rally since mid-May. XRP is down more than 11% week to date, on pace to break a 3-week win streak. This marks XRP's worst weekly loss since late February. Shares of Coinbase tracking for a 5th down day in a row and longest slide since February, also looking to break a 5-week win streak, its longest weekly rally since 2023. And this is after the stock hit an all-time high a week ago today, and Cathie Wood's ARK Invest sold more than $12 million of the shares this week. Let's also talk about Tesla's Bitcoin holdings. The electric vehicle maker dumped the vast majority of its Bitcoin at one of the worst times, losing out on billions. After buying $1.5 billion of Bitcoin in 2021, Tesla sold 3/4 of its holdings as the market was tanking the following year. Of course, Bitcoin has since rebounded, jumping about 80% in the past year. That means Tesla lost out on billions of dollars in potential gains. In that time, its crypto holdings rose substantially to $1.24 billion from $722 million per its earnings report out earlier this week. All right, back to markets for our main story. I spoke with Markus Thielen, CEO of 10x Research, about the rotation from Bitcoin to ETH and what's currently weighing on Bitcoin's performance. Well, Markus, thank you so much for joining me on Crypto World today. A really interesting week. I was just checking this morning. It looks like the inflows into Bitcoin ETFs are finally back after 3 days of outflows. Meanwhile, ETH ETFs continuing, I think, 15th consecutive day of inflows yesterday. And that really is in line with the trend that we've seen all week, which is I don't think that there's any loss of interest or anything in Bitcoin, but we have seen a really interesting rotation from Bitcoin and assets linked to Bitcoin into ETH and assets linked to ETH. High level, what do you make of that trend?
Yeah, thanks for having me. Of course, you had the big story going on that, the stablecoin issuance in the US that's going to ramp up, where we're probably going to go from 250 billion of stablecoins being issued probably to 3, if not even 4 trillion. And of course, a lot of the stablecoins are going to be on Ethereum. So Ethereum is really, the game plan here for a lot of investors. And, it has been cheap. It has been neglected, up until literally, 2 months ago, basically. And I think that's where the demand is really coming from. But I think the interesting aspect when we break it down, where is actually the buying really coming from? So when we accumulate over the last months, where has been the strongest actually price returns by region? It's actually the Asia region that's really, dominating here. And it seems Asian retail buyers have been front running a lot of the flow. And that's basically all the returns from Ethereum has come during the Asia sessions.
I want to look a little bit more deeply into Bitcoin. So, as of this morning, it was down a little bit. We've seen it pull, not like a big serious pullback, but it has been a little bit more under pressure this week, like I said before, compared to ETH. What is going on here? I want to get to the narrative part of it in a bit, but tell me what you're seeing in your research regarding the price action this week in Bitcoin.
Yeah, the interesting aspect is really that there is this big shift going on from the mega whales, from the early adopters, from the early investors, basically a lot of the early miners. And they have been selling really over the last kind of 2, 3, 4 years. But what's new now is really since last July, since Trump spoke at the Bitcoin, Las Vegas convention, really, or a national convention center where he spoke. It's really that these whales, which is the wallets of 100 to 1,000 bitcoins, are really increasing, buying aggressively. We know, for example, that BlackRock is using around 500 wallets. MicroStrategy is using around 500 different wallets, and they have been really aggressively buying. But over the last couple of days, it's really these mega whales that have been really distributing a lot more BTC than these whales are buying. And I think that's why we're consolidating. That's why we're going down a little bit, because of this supply overhang that's in the market.
And that, we talked about that pretty recently, and I know that that selling has been supported by a lot of the action that we've seen in the ETF inflows and in the, the mass buying by corporate treasuries and these new entrants focused on a Bitcoin treasury strategy. A big theme in the Bitcoin price action we've been tracking is that kind of support helping lower the volatility of Bitcoin. How are you tracking that right now, and what sort of direction is that going in from where you sit?
Yeah, so volatility actually has been trending down. The moves actually has been not as violent as we have seen during previous cycles. And of course, it takes a lot more money to really push Bitcoin prices higher. But there's also this seasonality impact where really the volatility tends to go down, towards and into the summer. And volatility has actually dropped from the 60-70% region to just 30% now on the 30-day realized volatility. And of course, somebody like MicroStrategy that tends to sell volatility, provide volatility to the market, be it through the convertible bonds, where they sell convertible bonds with the embedded option structure in it for relatively cheap money. And that's why these convertible bond buyers really buy these converts really. But with declining volatility, there's a lot less demand for this right tail upside potential here. And I think that's why we're seeing already there's a lot less demand for MicroStrategy products. They're raising a lot less capital. When we go back into, for example, December, they raised $15 billion on a 30-day rolling window, and right now they only raised $1.7 billion. So we are very low, and of course, the capital raising from MicroStrategy is highly correlated to actually the NAV, the net asset value, really. That's really the premium above their Bitcoin holdings, and that is really compressing. I think it indicates there's unfortunately a lot less demand right now from the market. And that's why we also hear not really a lot of capital raising despite Bitcoin nearing, all-time highs. And I think that's an interesting component because, yes, there are a lot of treasury companies, but they're buying relatively small because MicroStrategy still accounts for 2/3 of the corporate treasury market.
You had pointed out recently, Markus, that the strength of the inflows into Bitcoin ETFs started to really take off in April. And it was around the time that President Trump was starting to put more pressure on Fed Chair Jerome Powell. Where are we in that narrative? How much do you see that narrative weighing on Bitcoin now or playing out in the foreseeable future? Obviously, we had some activity from that story this week, and then we're going into a Fed week next week. So what are you watching there, and how much strength does that part of the narrative have on the Bitcoin price action right now?
Yeah, that's a really interesting aspect, the dynamic between President Trump and really the Fed chair. But I think the narrative that's becoming more and more apparent is actually when the debt ceiling was raised by $5 trillion. So yes, we had this rebound from April. Trump, started to complain against the Fed's high interest rate policy, as he called it. And of course, a lot of people saw the independence of the Fed threatened, and that's when a lot of the inflows into ETF really accelerated. And this is kind of the third wave after, of course, the initial wave of buying early last year when they were approved. And then, of course, there was another wave after the Fed cut interest rates by 50 basis points in September. And then the third wave was really when Trump started to go against the Fed, and the independence is really threatened, especially because he's probably going to pick somebody that's probably going to, supportive of his lower interest rate policy. But what has really changed a little bit or accelerated, and I think that was really the move why we broke from 110,000 to 120,000 in a very sharp move, was really when the big beautiful bill was really announced, was signed by Trump, and the debt ceiling was also raised simultaneously by $5 trillion. And within 2-3 days, actually the debt jumped by $400 billion. And when the market was aware of this $400 billion debt increase in one go, basically, that's when we really started to break out. So there's different components here, but I think Bitcoin is trading that, the US is going to increase the debt levels. They're going to cut interest rates eventually more, Trump-friendly Fed chair is going to be put in place, and I think this dynamic is going to be with us. So I think there's going to be a huge tailwind structurally that we're going to see under Trump's presidency for Bitcoin.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.